Welcome to the morning market briefing. Today is Tuesday, April 28th, 2026. Hope you guys are doing well. I'm here with the two hottest blondes in the office, Tom Klecker and Jonathan Hicks, and we're about to get down and dirty on some market news. There's a lot going on this morning. A lot of earnings coming out, real weird vibes, to quote TK as we were talking coming into the call. We're getting the world's worst employment number. We get ADP this morning, which we all know is going to be not the real number or anything close to it. So let's jump into it. Let's start with the jobs number, ADP weekly employment change. And this is interesting because Bloomberg has changed their formatting, so it's confusing to look at. So it came in at 39.250K, which is a really weird way to say, call it 39,250 jobs. So instead of just having a comma there, they put a period, 39.250K.
That makes sense.
Yeah, it's super confusing to look at, but that's the number. Previous number was 54.750K, but that has been revised down to 40.250K. So the numbers, not only are they bad and confusing, but now they're more bad and more confusing. So moving on, I think the big headline we'll see today is there's a lot of chatter going on about OpenAI. I kind of touched upon it yesterday just a little bit, where it felt like they're falling behind Gemini and Anthropic and Grok to a certain extent, or at least their market share is eroding, because it felt like ChatGPT has become the Kleenex. It's sort of what you say when you're using an AI large language model, but those aren't the ones that people are actually using the most. It seems like Claude has really clawed its way up the rankings very, very quickly here with Anthropic. I mean, they're talking about having a $500 billion valuation at their next kind of round of financing. But TK, give us an overlay of what's going on with OpenAI and what we should be looking for in terms of the market reaction.
Yeah, they had been kind of hinting at this a couple months ago, but they're facing like a financial crunch right now. They missed their revenue and user growth targets, which kind of conflicts with all of these financial commitments they have. They're committing $600 billion to future data center spending, and there's a lot of circular financing that goes with that too. And I think that Sam Altman and the CFO, Sarah Fryer, I think, they've kind of been in disputes over past months, and now it's coming to fruition now. There's this internal tension between, like, we need to have some sort. It's a growth mindset of spend as much as humanly possible, but we need to have some sort of financial discipline so we actually can pay off these financial obligations. And I like your Kleenex analogy too, except I think it's more like the actual Kleenex brand is a high quality brand. It's more like you call it Kleenex and it's actually like the great value Kleenex you get for 50% off.
Yeah, I wonder if it's going to become the Hydrox cookie of AI models, because people forget the Oreo is actually a ripoff of the original version of that, which is called the Hydrox cookie, which is sort of a garbagey Oreo from, I think, the early 1940s. But then Oreos came out and are a slightly better version and have become the dominant brand. So look it up. And I think they're also like, and Oreos may be this way too, where they're actually, because there's nothing in them that is actually real, they're like dairy free, but that's because they're made like of pure seed oils and there's no actual chocolate.
Plastic.
Yeah, it's not, there's no cream in there. It's actually, I think they use the word creme, which can be made of hydrogenated soybean oil as opposed to actual cream. But yeah, I'm fairly certain that the original Oreo was actually the Hydrox cookie, which still exists, but I don't know anyone that eats them. And it kind of feels like ChatGPT is going that way, where it was the first that came to market, but it may not be the best product. And then, of course, you're also seeing there's a lot of pressure. There's a lawsuit from Elon Musk. So for those who don't know, OpenAI was essentially started as a nonprofit for the benefit of human beings. And the idea was to get all the smartest minds together to try and figure out how artificial intelligence works, come up with a model and sort of make an altruistic version of it out of the gate. And Elon Musk came in and said, man, this is a great idea. I'm going to give you guys a ton of money to get this started, this foundation.
It was like 50 million or something like that.
Yeah, and he basically leveraged his network as well to put the best minds on the board, get everybody involved. And what essentially happened is Sam Altman hijacked it, has taken control of it, and now totally changed the mission. And it's now become a for-profit entity and is looking to IPO at the end of the year for a valuation of $800 billion. Now, because it was a charity, Elon Musk didn't get any equity, because you don't get equity in a charity because that's not a profitable venture. The idea was just the research of AI, which is why XAI, now part of SpaceX, exists, was basically his fight to say, hey, these guys have become the robber barons of this technology. They were supposed to be in it for the good of the people, and now they're not. So I'm going to now build one that is not chock full of weird, there's the Caitlyn Jenner dilemma, which is whether or not you ask the large language model if to prevent nuclear war, it would be okay to misgender Caitlyn Jenner, and ChatGPT will tell you no, but Grok will tell you yes. And that's sort of the thing where if it ultimately came down to it, there's a difference in ideology, and that's what Elon Musk is now fighting against, both legally to try and sanction OpenAI, but also with Grok and XAI by having his own large language model. So I worry that this is going to set up another run for NVIDIA performing poorly. A lot of these companies that have invested, we've talked about the circular financing, where everybody is lending money to OpenAI, who's then lending money to the chip makers who are, it's all this money. Like, there's no new money being created. It's all just being passed around in order to get this ecosystem up and running. And OpenAI seems to be faltering in a big way. And for the moment, they're the largest value by current valuation at $800 billion. They're the biggest player, but it seems like they're losing steam. And if that valuation turns over and they stop getting those circular financing deals moving through the pipeline, then suddenly, everyone's going to be standing around with their pants down and feeling embarrassed. So I'd be looking to see which companies are performing poorly on this news and what the ramifications are going forward. But it's an interesting thought process. We've talked a lot about the machinations of it for months and months and months, but now it seems like, could this be the canary in the coal mine, or at least the first one to turn out to be, a turd in the punch bowl, if you will. So moving on, oil. TK, give us an overlay of what's going on with oil and kind of your thoughts on the current situation in Iran.
Well, oil's up to, I think, the highest it's been in 3 weeks. Brent crude is up to $111 a barrel. I don't know. We're just circling the drain of deal or no deal once again. We're still fighting over. It seems like once every 3 to 4 days, we're introducing a new deal that involves some sort of stipulation. The Iranians will say, we're considering this. They'll put out a new deal. We'll say no. So I think we're still circling the drain on that. Strait of Hormuz is closed for the most part. I think that there was maybe 4 ships that went through yesterday or something like that. But I don't know. At least from a macro perspective, I think that it's still part of the news when it comes to the spot oil prices. But a lot of the big companies, this news has more become reality. And a lot of these big companies are just going to keep treading forward, I think. Yeah,
it seems that a lot of the flow has actually gone to kind of Louisiana. We've seen reports that there have been successful shippings of oil from Louisiana all the way to Japan, sort of circumventing the Strait of Hormuz, and now suddenly we've got new business to do here in these United States. I will say that Scott Bessent put out an awesome tweet yesterday that said, while the surviving IRGC leaders are trapped like drowning rats in a sewage pipe, Iran's creaking oil industry is starting to shut in production thanks to the U.S. blockade. Pumping will soon collapse. All caps, gasoline shortages in Iran next. So I think he's fairly confident that the timeline is running out for Iran. There were reports that they were, I guess, putting back online some old, rickety oil tankers that could hold a few days worth of oil and moving them towards the Karg Island to try and offload some of that oil so they don't have to cap the actual oil wells. But and we've talked about it a bunch. There's going to be a day where they're no longer going to have any capacity to hold that oil, and the Iranian oil industry will effectively shut down for perhaps a decade, because once they cap those oil wells, it's pretty much done. So they're between a rock and a hard place, but the problem is I don't think that they have any idea what to do or who's in charge. And I mean, I think it's all kind of collapsing in on itself, and it's business as usual, kind of moving forward. Sure, gasoline prices are up, but they're not up as much as they were, and they are still net lower than they were in 2022, 23. And so we all survived that, and the markets were up, and companies were making plenty of money, and hey, this is why we own oil companies. So
Yeah.
carry on. Go. You were going to say something.
We'll just moving on to the next thing. A little bit of big news out of the prediction markets here. So if you don't know the difference between the two prediction markets, basically Kalshi is regulated by the Commodities and Futures Exchange, and Polymarket is sort of regulated by them, but they're not technically regulated by them.
And you can't technically legally invest in them here.
No,
can you
because
now?
I don't know if you can.
I'm a Kalshi guy, so
they're going. I think they're in the process of becoming regulated, but like for example, that guy that got the guy in the Maduro invasion, he was on Polymarket and then got like accused by the Future Trading Commission. So So they're kind of like a shadow governor of Polymarket, but. Over 100,000 accounts on Polymarket lost at least $1,000, and that's at almost twice the number that have made over $1,000. The majority of the profits on Polymarket were made by a small group of automated bots, with everyone else losing $131 million in aggregate. So it's kind of interesting. I don't know who these bots are, but if you don't know exactly how these prediction markets work, basically to avoid the fact that they're gambling, they, instead of offering the liquidity themselves, Kalshi and Polymarket give the other side of the futures contract to a market maker like Citadel or Jane Street. So basically these companies aren't casinos, but they're paying someone else to be the casino basically. And I don't know, it's interesting that there's bots that are able to take advantage of these algorithms sort of. And yeah, with kind of how that's set up like that.
Yeah, it's interesting. I've gone on a deep dive on this on Twitter, and there's some threads that show that because there's so little volume. I mean, relative to, you go try and trade Apple, you're not going to suddenly just pick up a share for cheaper than anyone else because there's one guy who wasn't paying attention. That may actually happen on Kalshi, because if you're betting kind of fringe markets, I mean, they have stuff like what will the temperature be in the next hour in Atlanta, and there might be $7,000 total bet on that market. If somebody comes in and suddenly makes a $500 bet, you can be in a situation where you can have multiple positive outcomes. And so these bots will basically monitor for that, and then they'll take both sides of the bet, and then they'll win no matter what. And so that's what's happening in a number of different sort of niche areas. And so if you're just Joe Schmo and you're just goofing around trying to bet on the weather, you're going to be in a bad position because you don't have those models behind you, and you're not going to sit there and be like, all right, well, this is an arbitrage situation because, XYZ, trades have gone in and there's only so much volume, and you can't do that in real time if you're just goofing around betting on something. And so Polymarket is clearly vulnerable in that way, but it's also like when you have illiquid assets, they're vulnerable in that way. It's the same problem that private credit has. You're only going to get out of it what someone is willing to pay for it. And that's like if you have baseball cards or, fine antiques. I mean, like Antiques Roadshow, it's like, oh, I've got a sword that I found in my grandfather's basement. And they're like, oh, this could be worth $250,000 at auction. Emphasis on could be, because at the end of the day, how many potential buyers are there? And so that's when you run into problems with these thin markets, is that people are very easily able to take advantage of that because the number of players is small. And if you have an enormous amount of computing power behind you, you can quickly assess whether or not you can make money going both ways. And so that's what they've been doing. Kalshi, on the other hand, I do like to bet on golf on there because it's actually better, I think, than betting on a casino. Because if a guy, has a string of 4 or 5 strong holes, suddenly he'll go from a 3% chance of winning to a 15% chance of winning, and then you can cash out. It's a fun way to kind of actively be involved in the golf broadcasts over the weekend. But I would say, caveat emptor, buyer beware. You are not a computer, and these things are designed to make money for you or for someone else, as are the casinos. And so getting an edge is extremely difficult for the average person unless you have some kind of inside information, and even then it's very difficult because you've got, AI models going against you. So we'll see. Polymarket has had a tough time getting legality here. Kalshi has been contested in a number of states. I think Arizona is the one that's actively trying to ban Kalshi. And it's like you already can't bet on a lot of stuff. So, I mean, for me, it's nice that you can bet on Kalshi in the state of Georgia when you can't make legal sports betting, rather than have to use an offshore bookie like I have for many years, and just assume that money's never coming back to you, even if you make it. But, it's fun. It's certainly in my wheelhouse. As someone who's been listening to betting podcasts, and the podcasts existed, and sports betting has only been legal for a couple of years now in certain areas. Let's get into some earnings. There's a lot of stinkers, a lot of winners, lots to get into. Let's kick it off with Domino's. I know that this is a place you're very passionate about, TK. It's getting heated. I said, save it, man. Save it for the pod. Use that passion for the people.
I mean, I'll start off with saying I think that, maybe on a high note, I think that Domino's is underrated when it comes to getting like the cheapest possible pizza for. If you want a $7 pizza on a Thursday night, Domino's, it's got some good stuff. But from the company perspective, I think that Domino's is just, it's just over. To be fair, I think that a lot of it had to do with this company was way too expensive. I don't understand how people thought cheap pizza markets with competition from Pizza Hut, Papa John's, like that. I mean, it's almost a perfect competition market. They're offering basically the same product, fake bread, fake cheese, and fake meat. And it's going to drive the price down as quickly as possible. The margins for these businesses are going to be horrible. They're going to have to spend a ton on marketing to differentiate themselves. And this was really evident in Domino's quarter-day release yesterday morning. I think they were maybe down 10%. During a time where they're promoting probably the lowest deals they've ever had, we're seeing steep declines in transactions, which is probably the worst possible two things to happen together. Moving on from Domino's, Spotify released earnings this morning, also down 10% this morning. On the other side of this, I did not think that they had quite as bad of a quarter as Domino's did. I actually think that there was a lot of good things going forward. Q1 is typically the most soft quarter for Spotify, but what analysts were really wrapping their heads around were the guidance for Q2. They're planning on offering workout classes with Peloton through a new wellness center or wellness and fitness center thing through their app. They've been rolling out a lot of new products, think like blended playlists, a lot more AI features within the platform. And this is kind of where I think analysts are missing a lot of this revenue, or a lot of these operating expenses are going to be recognized in the second quarter. So the operating income for the second quarter is lower than expected. And that's basically the big driver of the stock being down like 10, 11% this morning. So I think that if you take a step back and look at how this operating income is recognized, they actually beat revenue for the second quarter too. So I think that there's actually some opportunity here with Spotify. And then with Avalon Bay, kind of a nothing quarter so far. Should be interesting to listen to the call later today. Looks like that rent prices and leases are relatively flat, so nothing to write home about with new movers. And then with UPS, reaffirmed guidance, but revenue was down. I'm not a big fan of UPS. They kind of did the whole big restructuring thing last year where they fired a bunch of their employees because they were paying them all $65 an hour plus 2 times overtime. So I think they're still going through that transition. They did not beat on revenue, but reaffirmed guidance for the year. And then on BP, moving on to the big oil companies, they had profits that more than doubled the last quarter from this year's time last year, from $1.38 billion to $3.2 billion. A lot of that was from oil trading, so much volatility. Their traders made a big bonus this year. And then just the conflict has boosted the oil prices. The trading margins have increased substantially. And yeah, a lot of operational uncertainty going forward. That's why the stock's only at 4%, but I think a lot of the growth was priced in for how many profits they were going to get.
Yeah, it's also been on fire like all oil companies this year versus the rest of the market. Yeah, we got a lot coming. What else we got? We got Coke, Starbucks, Fry's, or T-Mobile, and Visa, I believe, coming out. So tomorrow will be another big earnings day. We've got the Fed meeting tomorrow, which we'll preview. We'll see what old Nikki Leakes has to say on the Wall Street Journal, but expect
He was a
very
little quiet.
little from
He
that.
was nothing this morning out of him. Just talking about how should Jerome Powell stay on forever and ever.
Yeah, he wishes. He's going to have to find a new daddy, and that's going to be really tough for him.
I don't think Warsh is going to give him the inside drop every time something happens.
No, I don't think. I think Kevin Warsh is not going to be as tied in with the Wall Street Journal as previous Fed chairs. So, shout out to Janet Yellen. She's out there somewhere. But, I mean, those two together, a couple of knuckleheads, man. We haven't had a good Fed chief since Bernanke, and even he was a little bit suspect towards the end. So, well, that will take it into the workday. Everybody have a productive day. Grind out there. It's raining here. I think we're supposed to get an inch of rain today. So, stay dry, stay off the roads. Be sure your lights are on. It's a big pet peeve of mine is driving around the rain without your lights on. So with that, we'll see you tomorrow.